Hi, it's Anthony with Emerald Sun Energy. In this video, we're going to take a look at a case study of a recent project who was able to take advantage of the new commercial solar incentives that allowed them to convert 20% of their long-term savings into short-term profitability within the first 18 months. This allows us to change the conversation from payback period to positive cash flow day one. What makes this all possible is the evolution in available financing for commercial projects, combined with the increase in the federal tax credit from 22% to a whopping 40% for commercial projects. Traditional financing options available today in the commercial, solar, and real estate space are typically 7 to 10-year options. This means that you'll be upside down or negative cash flowing during the payback period. You will still have a great long-term return on investment, but it'll be an expense at the beginning of the deal. With a new funding option available, you will be able to extend that term out 25 years. You will be able to purchase the system with no money down, which means positive cash flow from day one. You will actually pay less than you do now for your overall power expense while insulating yourself from future power rate increases and produce cash flow profitability within the first 18 months. Let's jump into the case study and see how all this works. I'm going to go ahead and share my screen so that we can go over these options in more detail. So in this particular project, the customer was spending $6,500 a month. So you can now gauge what your return on investment will be really based on that. It's going to be relative. So if your power bills are $2,000, your overall profitability for the first 18 months will probably be about a third of that. But conversely, if it's 12,000 or 20,000, which I do have another case study that someone who had a $20,000 power bill, what that profitability and payouts and all that kind of stuff looks like. So as a quick snapshot, this particular system, they'll need a 320 kilowatt system to offset that. Now, the beautiful part about that, what I'll highlight here, is that payment is going to be $5,700 a month. The system's going to produce $6,400 a month of electricity. What that means is day one, they're going to be saving $700 a month. That's $8,400 a year, day one. And keep in mind, the power company raises that rate every year by typically 4%. You'll be insulated from that as well. So throughout the entire term, that payment is $5,700 a month, even though in 10 years, we know that $6,400 a month rate will be considerably higher. So that's the first step in what really makes it great. I'm just going to pause here real quick, as I love to point out the amount of major brands that you recognize that have made huge investments into solar. They do that because it really makes a lot of sense. And this was happening even before the new incentives and the new deal structures that allow this, that allows you to convert 20% of that long-term return on investment into cash profitability within the first 18 months. But the major brands, they invest quite a bit in this. And we actually, if you do want to request a special report, we go into the top 20 brands and what they've been doing and a sneak peek into what they're looking to do in the future. So this entire system cost was $704,000. The federal tax credit, which is 40% of the system, is $281,000. Another awesome incentive is now that this is capitalized equipment, you're going to be able to depreciate that equipment and gain anywhere between 15 and again, 18% of the cost of the equipment back in a tax incentive, which equates to about another $126,000. So the net system cost, so even if they came in on a cash basis, which I do have case studies on cash deals as well, and how that breaks down and when you get your payback and how profitable it is long-term. But the net system cost for something that's $704,000 is under $300,000, $295,000 in this particular example. So when we take a look at how that breaks down, again, after your total depreciation, your total system cost is $295,000 for a monthly payment of $56.69. And What that means is day one, you're cash flowing $700 a month. It's really significant. But where it really gets exciting is this is the payment. You get the tax credit, 281,000. You get the depreciation, 126,000. Those combined is $407,000 that you could roll out of the business in cash profitability with never affecting your overall energy cost. So now a lot of people will take that and pay it against the loan, which are options. I recommend cashing it out. And I'm going to, in the next slide, you'll see why. For two reasons. One, solar's awesome. You're going to see in this example is over $2 million in long-term savings. But to be able to achieve 400,000 of that in cash in the first 18 months, it just creates a much more attractive offer where that other 1.6 million, which is there and you will receive, it's in savings. So in many cases, you're just going to earmark that money for other areas in the business, and you're not going to really reward yourself for making this great investment and great decision. You do get the reward, right? Less pressure of an overhead and all of that. It's there. But to be able to cash out $400,000 in 18 months with no money down, no money out of pocket, using the money you were already paying the power company, reducing that cost, and then being able to cash out $400,000, that's how amazing this loophole is. I equate it to kind of a similarity between the PPP program and the EIDL, where you are buying something, so you are using your credit power, but you're actually able to cash out with never affecting your bottom line and cash flow and overhead. So why I recommend taking that tax credit and depreciation out in profit is simple. The beautiful part about the investment is you never negatively cash flow. This goes through a year by year payout of what your annual power savings are versus what your loan payment is. And you can see in this, and this is your year by year ROI, you can see that there's never a negative sign. And in the end, your overall ROI is over $2 million. Now, I run this second column of ROI cumulative because what we're going to do here is really start that from year 3 through year 25, because what I'm going to suggest you do is pull this money, 426, it's actually $450,000 with your monthly savings on top of what those cash out values are. If you just take that money and you invest it, heck, if you just invest it at 4%, over the time for that system to mature, which is 25 years, you will have profited over $1.1 million. That's on top of this other 1.6. So those two would be combined for your overall return on investment. Then if you got 7%, you'd be looking at $2.2 million plus the 1.6, or a total of 3.8 million. And then obviously, if you were able to get what the stock market gets in terms of their ROI, or $4.4 million at 10% over 25 years, and that's only taking the tax credit amount over that first 18 months and investing it. And if you got that, you're at 4.4 million plus the 1.6 million, or a total of $6.2 million. So it's very simple to see how and why taking advantage of this offer is so valuable. Now, again, if you paid down the loan, you'd shorten the term, but your overall profitability would absolutely be less. Okay, that's why I think taking the cash, investing it, and removing it from the business's profitability is absolutely the best return on investment return that you can achieve. But if you would like, click in the link below and schedule a consultation, a free Zoom call if you just want to check out your own individual situation. And again, this works for all. So again, if it's lower, it'll be a little bit lower your numbers, but if it's more than this, your power bill, your ROIs and all of that will be higher as well.